everybody, it's me, Myra, at Down Home Money, a simple approach to financial freedom. It's Tuesday, it's my day, and I'm excited to be with you. So let's get started. So, inflation, recession, raising the interest rates, the housing market's going to collapse. Oh my! We're going to talk about all of it. So don't miss out. You want to watch this whole video. A lot going on. So let's talk about inflation because, well, it affects all of us. I don't know about you, but oh my gosh. I went to eat at Chipotle last week, and I don't eat out a lot, but I went to eat at Chipotle, and what I normally get used to be, I could swore, I didn't really pay attention, but I thought it was like $12, okay? It cost me $16 to eat at Chipotle. I could not believe it. I couldn't believe it. I just couldn't believe it. I had to stand in line. I had to walk through the line and pick out my stuff. Then paid $16. Inflation. It's up 7%. I don't know about y'all, but have y'all gotten a raise? Have you gotten a raise at least 7%? Because otherwise, we're all working and making the same amount of money, but now it's costing us 7% more to buy anything. Isn't that crazy? So you know what that means? Every $100 you spend a year ago, today is going to cost you $107. That puts it in perspective, doesn't it? So I just want to share with you some of the things that are going on and what is happening with inflation and what we need done to stop inflation. Because, I got it all figured out. All right. So, everybody is raising their prices. And just to give you an idea on some of the things that have raised their prices, and these statistics come from the Bureau of Labor Statistics data as of December 2021. So just to give you an idea, okay, in the last 12 months, this is the changes that have happened. Gasoline is up 49.6%. 49.6%. Used cars, holy moly, can y'all believe it? People are selling their cars. They bought them new a year ago, selling them for more than what they paid a year or 2 years ago. It's just crazy. They're up 37.3%. Rental cars. Oh my goodness, you guys, I was in Kentucky last week and I had to rent a car. It cost me $123 more for the same car that I've been renting the cheapest little, just a little tiny little compact baby. Bring it to me. Just get me from point A to point B. It was like it used to cost me $220 something. It cost me $350. I couldn't believe it. Ridiculous, because the rental cars are up 36%. New vehicles are up 11.8%. Household energy. Have y'all gotten y'all's utility bill? Woo! Man. We've had some cold days here in Texas, and normally we don't have to use the heat that much, but I've had to have the heat on. And my utility bill has definitely reflected it. 11.5% on utilities. Overall inflation is up 7%. These are just a few. Rent is up 3.3%. Woo! I guess that means I got a raise because I have a rental portfolio. Airfare is up 1.4%. Toys, seriously? Toys are up 1.8%. Medical care, which has been going up year after year after year, is up this year 2.2%. Education, which has been going up year after year after year, it is 2%. And last but not least is alcohol. And thank God, because we're going to all need it, because the prices are going to kill us, and alcohol is up 2.3%. So I don't know about you, but I'm feeling it. My house is feeling it. And here at Down Home Money, we talk about financial freedom. And it's in times like this that we have to work harder to save our money. Because remember, when you used to spend $100, it cost $100. Now it costs $107. So if you were spending $93 of the $100, you were saving that $7. And now you will not be. Because now it's going to cost you that just to live. So I want you to remember that it's not how much money you make, it's how much money you keep and what you do with it. And remember, we need to buy assets that throw us off an income. And that leads us to where's the stock market going. You all know I built a dividend portfolio. And here's the thing with dividends. A lot of the companies I have are value companies. And the thing about that is that they have a good PE ratio, price per earnings ratio. Right now, a lot of people are buying growth stocks, and the PE ratios are ridiculous, like Tesla. I mean, there's some of the tech stocks that's crazy, and we'll talk a little bit about that and how that is impacting the stock market. So the NASDAQ has over 30% of its stocks are down 50%. And that's a little scary, y'all. That's a lot of the tech stocks you're seeing, and those are a lot of the growth stocks that their valuations are way high, and they just aren't producing the income for those valuations. So it's very speculative on what they're going to do in the future, right? Remember, in March of 2020, we all saw the fastest drop in the sell-off of 30%. Faster than it exceeded the decline of the Great Depression. It only took the S&P 500 22 days to drop 30%. And I share that because right now we want to watch what's going on. We're seeing some down days. We're seeing a lot of red. So be very careful and be very diligent and pay attention to what's going on in your stocks. If you're a buy and hold and it's for the future and it's in your retirement account, just keep your drip going. Keep dripping money in that account. Don't worry about it. Don't look at it. If you are in a brokerage account and you have a lot of profits to take, you might really evaluate, should you take some profits now, especially if you cannot afford to lose some money. So for me, I continue to invest. I've continued to invest on the dip, but I am going to take some of my profits this week. I'm going to take some of them out because I've made some great profits since March 2020, and I want to take that money and cash out and buy some other things when the dip comes, because I do believe we will have a dip. Because first of all, you know, Jerome Powell and the Feds, he's going to talk, and they're saying on March 16th, we will start having our first rate increase because we've got to get inflation under control. And the only way to get inflation under control is to raise interest rates. We've got to stabilize our market. And with the supply and the demand and the supply chain delays and all the things going on, we've got to get some normalcy back. I'm sure everyone has been impacted by inflation. And so it's important that we evaluate what's going on, but it's a balancing act because you go you go raise rates and raise rates and raise rates to stabilize the economy, but then we go into a recession, right? Or you don't raise rates and the inflation goes through the roof. I mean, it's really a balancing act, and the Feds will figure it out. You know, right now their plan is to slash stimulus and raise interest rates. That's the plan. And with inflation up and unemployment down, the U.S. Central Bank says it will cut bond purchases faster than they planned and hinted that they could raise interest rates 3 times in 2022. Raising rates will help to stabilize the market as long as they do it right. So if this happens, some people say that the Fed may push the U.S. economy into a recession, but honestly, we got to do something. We got to do something. So I just want to empower you to get your finances in order. You know, we've already dropped back. We're not saving as much money as we were saving in 2020. We now back down to where we were saving in 2019. But in 2020, we were saving like crazy because we had all that extra money. And now we're back spending like crazy again. So get back focused on your future self and what you want for your future, and focus on saving your money, getting you out of debt, get your debt paid off, and don't get in further debt. You've now gotten your interest rates. We've had low interest rates. Most of you have gotten refinanced so you could have a lower interest rate. Get those credit cards paid off. It's important. And let's work towards financial freedom. Financial freedom is where life gets really big. When you get to go to work because you want to go to work, not because you have to go to work. So I appreciate you watching our channel. Be sure and subscribe. Give us a thumbs up. Don't forget, Down Home Money. You can get it on Amazon. I also read it for you on Audible. So if you don't like a Southern accent, don't get the Audible, get the paperback. All right, I'll see you next Tuesday.